Hello.
Hi, Shelby.
How's it going?
Good.
Good.
So we're going to talk about the difference between pre-qualified, pre-approved, and approved, because it's totally not the same thing. All three are very different.
Very different.
And I think a lot of people might confuse them or what it means, or they haven't been explained what the difference is. So if you see, I've seen billboards or like advertisements saying get pre-qualified within 30 seconds or 60 seconds or something like that. Basically what that is that they're taking your income, like you fill out your own information. So we don't even know if like that income that you're putting in there is what the bank's going to use.
Yeah, but what we can use for it, because I mean, depending on if you're self-employed, if you're working part-time, if you're guaranteed hours, so many variables.
Yeah. So basically pre-qualified is you put in your information yourself and it tells you based on how much, and I think you also fill out your own debt.
Yeah.
Like they don't do a credit check.
Yeah, they don't check anything for credit, so they'll collect how much, they'll have you fill in how much income you make annually, and then they'll also have you put in what your monthly repayments are. Most of us tend to forget, surprisingly, that we do have repayments or what loans we have. And some people might not think about, their student loan because that's in repayment assistance. Despite the fact that you're not paying it, we still have to include that in your debt to income ratios because at some point in time, you will have to pay it, or your repayment assistance may not get approved. So they want to ensure that it's not going to create any undue financial hardship later on.
Perfect. And also, what else I forgot what I was going to say.
Oh, people input their own information, and then the calculator just tells you based on your debt and your income, you could be approved for X amount, but it's not checking your credit. It's not making sure that everything else is in line. It's not basing it on...
There's the debt I was trying to remember. Like, people always forget one thing. Oh, the line of credit.
Oh, yeah, the line of credit,
So lines of credit, we need to use 3% of the balance. Anyway, so
Yeah.
all of that, pre-qualified means you put in your own information, your debts, and your income without checking credit, and it tells you how much you could be approved for.
Yeah, theoretically.
Yeah, theoretically.
Provided everything checks out and everything you input into the application is 100% accurate.
And what the bank's going to use.
And
that's how much you could be
and
approved
another
for.
thing that people kind of forget as well is biweekly payments. They think, oh, my payment is $130 biweekly. That's $260 a month. No, it's not. It's not $260 a month because there are 2 months a year that you make 3 payments. So we need to average that out. So you have to take your biweekly payment times it by 26 and divide it by 12. It's going to be greater than that $260.
It's bigger,
Yeah.
Yeah, people do always say that. That's true. So pre-qualifying is basically just like playing with numbers yourself and seeing maybe this is how much you could get.
Yeah.
So I always like to do pre-approvals. Like fully underwritten pre-approvals.
Yes.
So we do that. Not everywhere. Like I've seen
Not everybody is going to do that. Yeah,
not
some banks
doing it.
don't even do that.
So basically, they're going to check your credit, might or might not look at documents.
Yeah.
That's super important. So we like to look at documents, like important ones that, depending on your situation, we might be like want to see certain things to make sure.
We don't always ask for, for sure T4s, pay stub, letter of employment every time for a pre-approval. It depends on every person's situation, what type of income you're making, how long you've worked at that place of employment. And usually like when we ask that, it's just so that way we can ensure that we're using the correct numbers for you. So that way when you do have an accepted offer on a property, it's not going to fall through because your 2-year average turns out to be less than what we were advised.
Right. Yeah. If you're like self-employed or using overtime
or
or
commission,
like,
bonuses.
Like that. If you're like full-time, but also we just
even if you're full-time salary, sometimes we'll still ask for a recent pay stub. We just want to confirm the exact amount of salary per year. Confirm that everything's on track. So pre-approvals, it's like actual credit check. Might or might not look at documents, but we'll like really underwrite the whole thing. Usually, so one of the big things is that sometimes, depending on the situation, some of them it's like, okay, it's totally 100% like I can't see anything wrong. Yeah, exactly. You've got a safe down payment, you've got great credit, you've had your job for a while.
Like generally like that should go through once you find a house, it should get approved.
Yeah.
But if someone is like borderline, or like the job's very new, or
maybe ratios are a little bit tight.
The ratios are tight.
Gifted down payment, borrowed down payment instead of a saved down payment.
That can all affect the application, how strong it is.
Past credit history too, on top of that.
Past credit history, especially past credit history.
Maybe your credit is, A1 right now, you fixed everything, you paid everything off, but I can still see that credit card from 4 years ago that you let go into collections that was written off by Capital One.
So they might or might not say yes for your approval.
They might say that they want to see more reestablished credit. They might say that they want to see more savings in the account.
Or a cosigner. Like that's, so basically we will only find that out for you once we send it for approval. Like once you find a house and like we have something to send to the bank.
And to the default insurers as well. Because at the end of the day, like we can say yes, the bank can say yes. But if Genworth, Canada Guarantee, or CMHC, I guess Genworth is now Sagen,
whatever.
Anyway, if one of those three say no, then the answer is going to be no, because we need to get their approval if you're purchasing with less than 20% down.
Yeah, so pre-approvals are actually like still a hypothetical, it's saying how much you can be approved for.
It's more certain than a pre-qualification.
It's a step up for sure.
But it's still, it's only worth the paper that it's written on, the paper that it's printed on. So no matter what, always make your offers conditional of financing, insurance, inspection, all of that. Because at the end of the day, it's not going to go to the insurers until you do have that accepted offer, because they don't want to review hypothetical situations. They're already very, very busy. They don't have time to review hypothetical situations.
And sometimes we can submit like to the bank for a pre-approval, but they don't all underwrite it.
Yes, exactly.
Sometimes they will, but then it doesn't go to the insurers yet. So if it is, like, it's still a step up, I guess, but it's just, a pre-approval is never like for sure. Sometimes, we can kind of tell you if we feel like maybe
it's on the fence,
or if it's like, okay, no, everything's really good.
And another thing could be like, depending on the property that you've decided to put an offer in on, maybe the insurers and the lenders are willing to accept you as an applicant, but they don't want to accept the house that you put an offer in on because it either needs too many renovations, it's in disrepair, they don't see enough fallback to be able to, upkeep an older home.
Or if it's like half finished, sometimes they don't.
They don't want to do houses like that unless you're doing a purchase plus improvement. Not everybody has funds to do a purchase plus improvement. We can get into that another day.
So generally, it's just like pre-approval is what you should do before you buy a house for sure, but it just doesn't guarantee an approval. Like once you do find the house, that's just like the next step. So it's just to keep in mind, like, you need to wait for the actual approval to make sure, like, or to tell people, like, I bought a house.
Exactly. Don't start telling people you bought a house until it closes.
Almost. Oh my gosh. Okay,
just because there's so many different areas that, like, what if you do the inspection, you know what I mean, and you see there's issues with it. And now all of a sudden it's not closing anymore, but you've told half your friends that you're going to be living on this street and come to your housewarming party.
Don't book the housewarming party before your closing date. Don't plan too much. But so basically, we get a lot of people asking the question, like, when they put an offer in, and then we're like, oh, okay, awesome, I sent it for approval. Once we get an approval, it's pretty legit. But
there's still conditions.
There's still conditions. We still need to send all of the documents for them to review, to make sure they're all good with it and that it still works and that everything we put in the application is the same. Or that whatever the real numbers are, will work at that point. So before we have like a file complete, which is why we also only send usually finance letters like once we have our file complete, like once the bank actually looked at everything, to make sure that it's all like official.
Exactly, because we don't want it to fall through, because if there's two areas that a deal can fall through, it's either going to be like your down payment or your income. 9 times out of 10, it's those two spots. There either isn't enough money saved, or maybe you're not guaranteed hours like you thought you were.
Like employment on
the employment letter.
That's where it comes out.
Or
if we need to use
the verbal.
The verbal. That one's usually. And most banks will do a verbal. They'll call the letter and
pretty much every bank is going to do a verbal. I don't think any one of our lenders don't do a verbal.
I don't know.
Some banks will even call the clients.
Really?
Yeah.
Oh, yeah.
We have a couple banks that call the clients. They do like a welcome call. Yeah. And then they also kind of confirm the information in the application a little bit, I think.
Okay, I never knew what was in the app, like, because they do it afterwards.
Yeah, they do, yeah.
Cool.
Confirm that they're actually buying the property. And
oh my gosh, really? They asked that?
I'm pretty sure, yeah.
Whoa.
Yeah.
Okay. I mean, yeah, it makes sense.
Yeah.
But yeah, no, so it's like, it's just so that I feel like when people know what to expect at certain levels or like in the process, it just helps relieve stress. Because sometimes when I'm like, okay, well, I'm just waiting for them to confirm it, they're like, well, aren't I already approved?
I already have the commitment. What do you mean?
Like, still, so it's never like 100% until, for us anyways, it's never 100% until the bank gave us their like, okay, I checked everything out,
everything's signed off, instructions are sent to your lawyer,
file complete, like those conditions are completed, then we're like, okay, awesome, perfect, then then it's like, official,
then we're like, okay, it's in the bag, your house is closing.
So that's perfect. So hopefully that helps and that can clear up some
confusion.
Things. Yeah. And I mean, if you're gonna like do a pre-qualifying, like I would just do a pre-approval. If you're serious about like wanting to buy or wanting to know what you can buy.
Yeah, if you're just casually looking into it and you're saying, well, maybe, you know, in a couple of years from now, I would like to know based on my income, my current income level, or based on my current debt, is it possible?
Yeah.
Okay, check out a pre-qualifier. Yeah. But I mean, like if you actually want to start looking at houses and going to view them, go get pre-approved. Don't base it on a pre-qualification. Yeah. Because at the end of the day, it's probably just going to hurt you.
Yeah. And you want to talk to someone that's going to check your stuff too.
Yeah, exactly.
And check your credit. Like you need to, and also like people always ask like, oh, is it like a hard hit or a soft hit? Like,
it's always a hard hit.
It's always a hard hit, and like it doesn't change anything. Like don't worry about it. It won't change your score.
No,
like your score changes every month anyway.
Exactly. So it might go up or down a couple of points, but honestly, if those couple of points are going to be the make it or break it, and I think we've touched on this in previous videos.
We did, yeah.
Then you're not ready to proceed. You need to wait.
Don't stress about that too much. Yeah, we gotcha. Yeah,
awesome.
Cool. Well, hopefully that helps.
Yeah, hopefully.
Awesome.
Cool.
All right.
Thank you.
See you next week.
See you next week.